Imagine if something like the 2008 financial meltdown or the COVID-19 pandemic shock happened again. We need to be prepared for it, and today I will give you top 3 tips on how to survive a financial crisis. First, don't put all your eggs into one basket. Diversify. Mix up your assets. Think of your portfolio as a balanced meal. You need a mix of protein, like stocks, healthy fats, bonds, and complex carbohydrates, crypto. Within stocks, invest in various sectors like technology, healthcare, and consumer goods. This avoids being too reliant on one industry that might be especially vulnerable during an economic downturn. Go global. Invest in both your own country and other countries. Just like traveling broadens your horizons, investing globally can reduce risks associated with a single country's economic slump. Second, build a steady income. Dividend investing. Dividend investing is like owning a money-generating machine. It involves investing in companies that regularly distribute a portion of their profits to shareholders as dividends. These are often called dividend aristocrats to invest in during economic uncertainty. After receiving dividends, reinvest them for growth. Reinvesting your dividends can help your investments grow even faster over time. Third, invest regularly. Dollar cost averaging. Dollar cost averaging is a simple yet effective strategy that involves investing a fixed amount of money at regular intervals, regardless of market conditions. Invest a set amount every month or quarter. Buy more when low and buy less when high. When prices are low, your fixed amount buys more shares. This provides benefits of dollar cost averaging during a recession. And this is top 3 tips. Follow for more valuable content.